The negotiation itself has gone very well, actually. Very well.
Mr. President.
It could happen. I mean, if it happens, and it might not happen, who knows? But if it happens, it could happen like over the weekend.
Mr. President.
If we can get something down in writing which will accomplish the same thing without killing everybody, I'd like to do that.
President Trump projecting confidence that a deal with Iran may be close, but markets remain split. This AI-fueled record-breaking rally being put to the test today. Days to come? That's the question. Welcome to the Big Money Show. I'm Dagan McDowell, along with my illustrious co-host. Not enough adjectives for Taylor Riggs, Brian Brenberg, Jackie DeAngelis, and with us for this hour, Making Money host, Charles Payne. Welcome, sir.
Thanks.
The Iran ceasefire showing its cracks. The White House fighting a brand new battle on Capitol Hill. The House voting to limit President Trump's war powers on Iran, a move that the president himself says could undermine America's negotiating leverage. And markets wobbling. Look at the Dow to the plus side, 1.7%, as the rally has been, well, on Iran deal optimism, but really AI optimism, economic optimism. After 2 weeks of pricing in a deal, traders are reckoning with the fact that oil prices staying elevated. The Strait of Hormuz could remain at least partially closed. Inflation, sticky, could tick back up. And the Federal Reserve's rate path gets awfully messy. The president says the American economy is more than capable of weathering the storm.
We just hit the greatest stock market in history. Everyone's 401ks are the highest they've ever been. Everybody's making a lot of money. Costs are coming down. You know, we took over the highest cost and the highest inflation in the history of our country. Costs are coming down. Everything's good. And I hate to tell you this, but we've got to take a little detour and go down to a place called the Islamic Republic of Iran. And we're going to have to stop them from having a nuclear weapon.
Charles Payne, and I would just point out that Broadcom, AI chip, kind of nascent in the AI chip business, is disappointing investors. But of course, this is after adding, I think it was $270 billion in market cap in 5 trading days.
Yeah.
So, hey, nothing like more than $250 billion. And you disappoint by, I think it was basically $1 billion. But just whatever you want to talk about.
Yeah, listen, it's, what I love about today's session is that some money's coming out of some of these gargantuan winners, and it's not going to the sidelines. It's finding all these other areas. I mean, think about the S&P right now. Tech is 40% of the S&P. That came at the expense of every sector. Almost every sector, arguably, is underrepresented in the S&P. You can make an argument for owning any of these stocks if it wasn't for the fact that we're in this once-in-a-lifetime opportunity with technology. So I love the fact that, you know, a little bit of money is coming out of Broadcom, a little bit's coming out of some of these optic names, photonic names, but it's not going to the sidelines. It wants to stay in the game. That's a lot of confidence, right? And I think President Trump hit it right on the head. You know, when last week when the savings rate came out, you know, we keep spending. Personal income was less than expected. Spending was actually strong. Some people say, well, it comes at the expense of savings. Now, there is a difference between how much we've saved and the rate of savings. Our rate of savings is low. But it's low because a record number of people are in the stock market, which is at an all-time record. Home prices are still holding up. And so the wealth effect is really working, and I think that's the underpinning. That's why the economy is so resilient, and that's why I think we're going to be able to make it through the Iran conflict and regain momentum as the year goes on.
I love the optimism. Some of my data sort of echoes that. Some of the notes I read this morning says we're sort of underway on maybe an overdue correction. I'm not sure you could really start to call this a correction yet, but I do like that some of the air is coming out a little bit. For stocks like, you know, we talked about Broadcom, if you're trading it 22 times and the average is 18 to 20, and you just beat and then you maintain your guidance, but you don't raise your guidance, well, yeah, you're priced to perfection. So I like that it's rational insanity coming back to the market. What is interesting is I'm wondering how actually short-lived this could all be, because the underlying economics shockingly, in the face of Iran, look so strong. We got the manufacturing orders yesterday that just showed an incredible surge for capital goods, non-defense, transportation. You're up anywhere from 20 to 25% in those orders in April alone. So that sort of industrial side of that AI economy is accelerating. I think what's also interesting is the Dallas Fed's Lori Logan came out and said that data centers are creating significant labor demand. So again, that's not necessarily directly related to Iran, but the fact that you're seeing massive demand for an economy in America, that you're not seeing this in Europe, you're not necessarily seeing this in other parts of Asia, where AI data centers continue to power us through, despite what we're seeing, I think, in the Middle East. Finally, I'll end on this. We got productivity numbers as well. You guys, that 10-year productivity is 2%, but the last 2 years we're running at 2.4 and 2.6%. So as long as we can continue to be more productive, that helps keep sort of those unit labor costs lower. It does help in the face of rising inflation.
But it was weak first quarter, was it not? It was a disappointment in terms of what people were expecting. I mean, it was much lower than it was the previous quarter, was it not? What was the growth? It was like 0.3.
0.3, and I think 0.05 was maybe the estimate. But again, though, to Taylor's point, the trend is what's really critical right now. And you got to believe, as these data centers do come on, and over the next several years, there will be a productivity miracle that matches the productivity miracle we saw in the 90s as well. So, and those jobs you talk about, those are great paying jobs, right? That's what we're talking about, really great paying jobs. Right. And you know, any place that doesn't want these jobs, doesn't want these opportunities, is making a huge mistake, in my opinion.
We talked to a guy the other night in the trades. I think it was Ohio. And the reason he came on is because he said, you can't kill the data centers. And now we're going to talk about this later in the show. But he says, if you kill these data centers, if we do these moratoriums, you have no idea how many blue-collar jobs you're going to kill. They haven't seen a surge like this in his lifetime, and it's because of the investment in those things. So that's good. Like, if we're pro-trade in America, we're going to have a real conversation about what that means if we become kind of anti-data center, take these moratorium. And I'd hate to see that, because I love the surge in blue-collar jobs right now, and it is very much an AI story.
You see it in the stock market. You know, the blue-collar industrial stocks. I've had a lot of people come on the show and say, I like Eaton. Eaton's a 115-year-old company. Right. Quanta, you know, General Electric, you know. These are old 100-year-old companies that are doing extraordinarily well. They've been revitalized, right? All of those data centers need cement, rebar, all these things, and components, even things you wouldn't think, the most unsexy stuff in the world. It's part of the sexy technology story. It's the foundation of it.
But the question is if that can sort of outlast the Iran conflict.
Oh, I hope so. It's going to be, we're talking 5 to 10 years, so I hope the Iran conflict is over in 5 to 10 years.
But well, I was talking about that this morning as we showed a clip of one of the Democrats going after Marco Rubio. Their new thesis that they're out there with is President Trump had no idea what was going to happen economically, the pressures, inflation, oil prices. And so, you know, he's hot. I'm paraphrasing here. He's hot-headed, and he started this war, and now he has all these problems that he wasn't prepared for. I actually think the opposite is completely true. And once again, this is another narrative they're peddling because they have nothing else to say. When you think about the groundwork and the foundation that the president laid to go into this conflict, I think he thought about it very carefully, and he knew exactly what could happen, but wanted to mitigate the consequences of it. So you've got two things happening here, and I'll kind of stay away from stocks, but just to say, you know, AI is the growth part of the story that's going to drive us forward. The big, beautiful bill laid a lot of policy work. Drill, baby, drill is keeping oil prices low, which, by the way, are down once again today. I think 92 and change is where we're trading right now. And I think that he thought about all of these things before he did this. And my thesis overall is that, you know, yeah, maybe they took out the first layer of leadership and thought the regime would collapse sooner, but it's not like they didn't know that they had a fight on their hands. However, I think part of the negotiation tack right now, and why it's taking longer than everybody's expecting, is because you're seeing this pushback in Congress. And I said a couple of weeks ago, my feeling was they were going to try to limit his war powers. And therefore, when everybody stands up and says, well, why don't you go finish the job militarily, like, we're so angry about it, he's got a lot of considerations to make when he is making these decisions. So under the circumstances, all things considered, the markets are intact. Oil prices are intact. They'd be significantly higher if we weren't drilling in this country. Yields are staying relatively tame, and hopefully will come down later in the year. And he's got a situation where he could just not be a steward of the American people for 4 years, but elicit real global change here, significant change as we move forward.
I don't know whether to talk about productivity because I have argued against the concept that there is going to be broad productivity gains for every industry and every company because of AI. And you're witnessing it with even companies like Uber, where Uber comes out and says, oh, we burned through our Claude budget our annual budget in 4 months. And then the president has the audacity to come out and say, well, we're just not seeing whether this is worth it, and a link between the actual budget and what we're consuming in terms of coding and tokens and customer features. I'm like, yeah, but it's because you created a tote board and you rewarded the engineers for using the most tokens, and that is bad management.
Right.
That is not
Exactly.
productivity.
That's what I was gonna say.
Because y'all are crap managers, and you are actually seeing that across industry. And so there will be the Walmart that harnesses productivity and transforms retail, and it's not retail that was transformed, it was one company that transformed the world of retail. And that happened in the tech boom starting in the late 80s and the 90s. And I just question whether this is going to be broad or not. And I could keep going because I think what happened in the last week in terms of you have a city in Monterey banning through a vote all AI data centers. That was the first city in the country to do it. New York State, the Democrats in the legislature are going to have a 1 month moratorium. a 1 year moratorium on AI data centers. You've got Elizabeth Warren who wants to tax companies that haven't even taken off. You've got Bernie Sanders who wants to confiscate half of companies that haven't taken off. And the dirty secret is, nobody wants to hear it, you don't have to put these data centers in the United States. You can put them anywhere.
Well, pretty soon we'll put
Because
them on the moon.
they're not latency sensitive.
Right.
You can put them in Indonesia or across the border in Mexico, and all of these boneheads ought to wake up about it.
You know, this war, the Elizabeth Warren and Bernie Sanders, just think about, we have one stock, one company, NVIDIA, that has the market cap of UK and France combined. The top 10 stock markets in the world, the bottom of them, I think, is the UK and Germany hanging by a thread. Think about that for a moment. Yeah. That's scary. That is really, it wasn't long ago that the sun didn't set on the British Empire. Right. And so all of these nations, India, Taiwan, South Korea, with much smaller populations, are much more dynamic. They're going for growth. They're going for prosperity. We saw how Europe did this. We saw the big welfare. We saw the open borders. We saw the war against prosperity, the war against technology companies. They never fostered innovation. They taxed it. They regulated it. We're lucky to be in this position because we didn't follow them.
The Achilles heel of the left is they don't understand competition, right? So they think the thing they enjoy now is the thing they'll enjoy forever. That's how they feel about New York, California. That's how they feel about America. And the cold reality is there are talented people everywhere, and capital will go to where it's rewarded. And Warren and Sanders and all these folks are the least capital rewarding people on planet Earth, right?
I also think they don't want President Trump to have a win right now, and you've got a sector, technology
Great point.
and AI, that is fueling this
That's
rally.
why these short-term moratoriums,
They don't like
Yeah.
it, and that's why they wanted to kill it before he was elected.
Wow.
Yeah.
And also people like the AG down in Florida who's suing OpenAI and Sam Altman. So it's coming from both sides, and therein lies the danger.